Hello, I'm Asif Farouk of Finextra and we're here at ACI Exchange and I'm speaking to Gareth Lodge of Celent. Gareth, thanks for joining us. So we hear that real time is the goal, but what does that actually mean for you and what are some of the challenges in implementing real-time payments?
It's interesting, we're doing a lot of work with our clients around this at the moment. Firstly, there's a huge misunderstanding about what real time is. Which bits are real time? Is it the posting? Is it the settlement? Is it the transaction? Is it the notification? Secondly, why do we need real time? There's plenty of countries saying it's far off in the future, it's not something we need to do today, but we know there are more than 35 countries globally with real-time payment systems already. It may be the goal, but the challenge of course is getting there. Many of the systems are deeply embedded into corporates, into consumers' lives, and so the cost of making everything real-time, because it's not just the payment systems, but it means that no bank has a downtime anymore. It's the customer systems, it's everything that touches the payment system as well that has to be real-time and available 24/7. That's the real challenge in getting to real-time.
Okay, so let's move on to transaction banking. What trends do you see emerging in transaction banking in the future?
It's an interesting time in transaction banking. We see lots more banks investing into their products and services. We see a number of new banks entering into transaction banking overall. But if you think about it logically, transaction banking is a finite market. There are just so many corporates wanting to do so many transactions. And so we're starting to see a number of banks starting to move away from quantity of market share to quality of market share, in the same way as the card industry did 4 or 5 years ago. And so they're investing significantly improving the quality of customer service and experience for their corporate customers, rather than just necessarily trying to move down market or into new regions.
So all of the banks are talking about payments innovation, but is the innovation being done by non-banks?
I think that's the perception of many of the industry. People will point to things like Square, for example, in the US, the MPOS device. But it depends on what you mean by innovation. One of our big outsourcing clients said something very telling. One of its banking clients had always said, why don't you innovate more? And they say, well, how do you think we meet your increasing demands at reduced cost, except by innovating? So I think there's a misunderstanding by many in the industry about what innovation actually is. But payments is a two-sided network. Many of the innovations we've seen so far are at the value transfer point at either end. For real end-to-end innovation, it takes everybody in the market to do so, because you need people with the ability to make that new payment type and those people to receive it. It can't happen with just one side of that market, and that's difficult. Debit cards might be the greatest payments innovation we've seen over the last 20 years, but it took 10 years to be the overnight success that it was.